Farouk Muad with Muad.com. Weekend world market analysis for the weekend of December 19th and December 20th, 2015. Let's take a look at how markets closed on Friday. We can see essentially mixed bag, but mostly to the downside. Japan was down the most, about 2%, and the other markets were slightly down. No big move on Friday. Take a look at how European markets closed. And we see that European markets here are also down as we go into the close of Friday. Take a look at how things are shaping up here in the Americas. And we see that Brazil is down about 1.8%. We see that Canadian market is pretty much unchanged. And we see that Argentina is down, Mexico is down. Take a look at the US market. And this is with about half a day to go before the close of the US on Friday. We are looking at the Dow right now down about 1%. And we are looking at gold up 1%. And so is the oil trade. So gold and oil up, Dow down. We'll see how we close for the week. So let's take a look at world markets. Let's begin by taking a look at the S&P 500 weekly. Again, with about 4 hours to go before the close of Friday's session. It remains to be seen where we are going to close as we go into the new week. But one thing I want to note here is right now we are looking at the S&P 500 showing resistance at its 10-week moving average, which might be suggesting that the market is not as strong as it looked like early in the week. We've also failed to reclaim that level above RSI 50 on the weekly. That is a subtle sign that the market is not as strong, because a strong market will easily take back the 50 level. Here we are seeing the S&P 500 as of right now failing to hold above the 50. And the reason why I wanted to include the S&P 500 on this world market analysis is because take a look at how the weekly chart MACD is shaping up to trade here. We've gone above zero, and potentially we are going to go back below zero with what looks like uniform action. If that is the case, in other words, if this is confirmed as uniform action rejection at the zero line for the MACD, personally that does look like it is suggesting more than likely we are going into a phase where world markets and the S&P 500 in particular are going to be dropping. So let's watch this. Anything back below zero on the main MACD suggests that we are in a period where markets more than likely are going to be tracking lower. Let's take a look at the Australian market, and we see that Friday's trade was unchanged. So as of this past week, we see that it held nicely above the previous 2015 weekly closing lows. The level to watch there where the market needed to hold support was 5,060.80. And we can see that the market did hold above that after trading below that level during the week, but managed to close higher. So that's a subtle sign here that the market might actually be stabilizing. So the key is whether it can hold above 5,060. If it can hold that, then maybe it can start correcting some of this recent bearish look. Also, one can argue that we see an improvement in the RSI on the weekly. Improvement in the RSI as prices have generally been trying to make fresh lows. So maybe this is something to hang your hat on there for a recovery, maybe not. You take a look at the monthly, and the monthly still looks scary in my opinion, because take a look at the potential for moving to fresh lows. And the reason why I say that the potential continues to be that this market goes lower is because we are looking at the MACDs making a move to fresh 3-year lows. This is the main MACD. Also, the main MACD is just about to move below zero. That's a sign of a bearish market. We've seen that the secondary MACD already broke down early in the year, and we are seeing the potential to move to fresh lows here on the MACD, on the monthly. This is a 3-year monthly, and also the potential for the monthly RSI to jump to fresh 3-year lows. Now, moving the MACDs and the RSIs, so the RSI and the MACD moving to fresh 3-year lows is the worst or the strongest sell signal you can find in the market. So the risk here continues to be to the downside in my opinion. If we take a look at the Chinese market, we can see it did manage to hold above an upward sloping 50-day moving average. So it's trading between the 50-day moving average and the 200-day moving average. So it looks like a sideways market here. the best I can read this. Also, we can see evidence of sideways action. You can see if you take the lows and the recent highs, maybe even something like that. You can see that we've been trading in a wedge type formation. Also, the RSI is trading in what looks like a wedge, in my opinion. So we can see here that the Chinese market really needs to get out of this wedge, either for a move higher, for a swing trade higher, or for a swing trade lower, depending on which way it decides to go. I personally think it's gonna stall. Let me explain why. Because we go back to the previous break right there in the RSI, and given that other markets are struggling worldwide, we can see that if we draw a line from the breakpoint in the RSI there, as of right now, the market is coming back to test that red line. I think if this is confirmed as resistance, it might make sense that the next swing trade is down. Take a look at the weekly. And on the weekly, we've been watching to see whether it can hold back above the 50 level on the weekly RSI. So the 50 level on the RSI is where it's been stalling since about June of this year. Every time it comes here, it's been showing resistance. So until such a time it can clear this 50 level, one has to assume that it is either sideways or probably potentially going down. Now you can set an alert, which is the recent weekly closing high. And should the stock market, Chinese stock market, move above the recent weekly closing high, then maybe there's a chance that it starts moving to the upside. The level to watch there for potential move is if it can move above 30.50, which is the recent weekly closing high. Anything above the recent weekly closing high, there's a chance that it might start moving to the upside. If we take a look at the Nikkei, we can see that, and this chart doesn't show Friday's drop, about 2%. So we can see that after closing for a nice gain on Thursday, which moved the daily RSI above 50, we are seeing that the exact opposite action took place on Friday, with the market dropping about 2%. So there seems to be some type of resistance around the 50 RSI level on the weekly, and that is consistent with the previous break on the daily. So there was a break here coming in sometime in August of this year. So that break around the 50 level brought the market down during this period. And so we can draw a line from here, and we can see that it is coming into play right now with resistance around that 50 RSI level. So I think this market here is probably following the S&P 500 lower. And also if you take a look at the weekly MACD, so keep in mind here it closed down for the week. But more importantly is the MACD and what's taking place on the main MACD, where we see the potential for this market showing uniform activity or uniformity by moving above zero and back below zero. Now if it moves back below zero on the main MACD, that generally tends to indicate a sell signal. So let's watch for uniform action back below zero. If it takes place, expect the market to continue trending lower in the coming weeks. Now if you take a look at the Japanese market, and this is a long-term monthly chart going back to 1985, so this is a lot of data here. What I'm going to do is I'm going to draw a line at just about 61.8, somewhere around there. So this line is at approximately at about 61.8 on the monthly, and boy does it give you a lot of information. Take a look at the break here of the highs, all-time highs in late 89. The market hasn't been back to those levels. It was resistance here in 96 for the highs there, resistance here for the highs before the drop of the major bear market of 2002, 2001, 2000. Also we see that once it also broke through support here, let's draw it correctly, this break back below 61.8 was the reason why the market dropped off the highs of 2007. And we can see that this also was support recently for nice entry, and now it seems like it is showing resistance on that level. So looking at this chart going back to 1985, if this is going to be confirmed as resistance, more than likely it is telling us that the markets are due for a major multi-year bear market. Speaking of long-term monthly charts, take a look at the Nifty chart going back to 1990. So the Indian market here going to 1990, and I'm going to draw another line precisely at about 61.8, which should be somewhere around there. So 61.8 again, and we get a lot of information here. You can see a break here off the highs of 94, another break in 2000 there, back below 61.8. There was a break here in late 08 or late 07 for the highs there, and the resistance here in 2010 for the highs there. And now we see that over the last couple of months we did move back below that 61.8 level, suggesting that this is probably one of the reasons why the market is off the highs. If we take a look at a 3-year monthly, we can see here in terms of the price, and solely by the price analysis here, we can see ever since the market jumped to the level below the recent monthly closing high, we suspected the market would be weak and I guess unstable. 7948.90 was the level we were watching. So once the market moved below this recent monthly closing low, the risk has always been to the downside. If you take a look also at the monthly chart on the MACD and RSI, you can see the RSI continues to be at a very risky spot, because here it can very easily continue down and break to fresh 3-year lows. So the move to fresh 3-year lows would be a major sell signal. We can see that at least one of the MACDs is already at 3-year lows, and one of the MACDs is already punching through zero. So here we are seeing that the MACDs and the RSIs are potentially also confirming that this market could easily continue to go down, maybe even substantially lower, especially if it continues breaking short-term lows. Now if you take a look at a 13-year monthly chart, so 13 years monthly, just want to show you another way to look at this. We can see that there was a trend line break on the RSI connecting the lows of 03 and this light node here in 08. Once the market broke through that, that became a sell signal sometime in 08 before this major bear market, right? Now we see that over the last couple of months we've done the same thing, or we are doing the same thing supposedly. We are breaking down here on this trend line, going back to the lows of late 08, early 09, the lows of 2011 and the lows of 2013 on the RSI on the monthly. So this break might suggest that over time we might be trading substantially lower. That continues to be the risk. If we take a look at the Nifty day to day, we can see that it is also showing short-term resistance at the 50 RSI level, and I think there is another slight indication, or at least some indication visually, that something has changed in the market, that every time it tries to move, it's coming into resistance here. Also could not make it up to the 50-day moving average, showing resistance at the 50 on the daily RSI. It's just a market that is not strong. And so there's a lot of things here that one can start arguing that this market is acting, I guess, bearish, would be or preparing to even go down. You can see here there was a recent break in the RSI. For example, this break in August. So this plunge that brought the market lower happened to be that break took place at around 50. You can see that since then, every time we move back below 50, the market drops here. And also we can see resistance at that line over the last couple of weeks and months. So there's something here in the market that I personally think is indicating more than likely over time we are probably have the presence here to see the odds are favoring markets to be down, and probably substantially down in 2016 because of this chart, unless the market can start correcting some of these bearish looking aspects of its dailies, weeklies and monthly charts. If I would point out one thing that looks a little bit encouraging here short term, is the fact that we made a lower low on the weekly chart for the Nifty, lower low, and yet we can see that an improvement in the weekly RSI. So if you're looking for a reason why this market could recover, there it is. One thing it needs to do is hold back above the 10-week moving average. It's a declining 10-week moving average, and the market needs to be trading above that for any chance of any chance of encouraging bulls that the market has a chance of moving high. You can see on the way up during this phase, the market was using the 10-week moving average as support. Now it looks like the 10-week moving average is being used as resistance, and that is a change. So first order of business is the market needs to claim the level back above the 10-week moving average. Otherwise, again, I still think and I suspect that over time the trend seems to be to the downside. Let's take a quick look at the South African market. If we take a look at this movement off the highs, we can see that there was a break. Let's call it somewhere here. You can see that break short term brought the market off this gap down level here. We haven't been back since then. Market's been lower, and so we can also see that there's a line here where the market has been struggling to move above, and I'm drawing that line because you can see over the last couple of days the market has come there, tagged that line, and is now dropping on Friday. Also, we see that that happens to be where we have short-term RSI topside resistance connecting the recent RSI highs, and now as we come into Friday, we see that it's being confirmed as resistance. One thing we can see here that is on the long-term monthly chart. So this is 3 years worth of data, and we can see that this is an ugly looking monthly chart because it is moving to fresh MACD lows on the 3-year monthly chart, and the main MACD as of right now looks like it has the threat of moving to fresh lows. That's a major sell signal, and we can see that the RSI already moved to fresh 3-year lows, and also the RSI is moving below 50 this month, suggesting net this is going to be a big down month for the month of November. Let's take a look here at the ETF that tracks the Nigerian market, and we can see that the NGE continues to trade with a bearish chart because we can see now the RSI on the weekly is below 30.9. Also on the monthly, this is a bearish looking chart, continues to make fresh lows because the RSI on the monthly continues to trade below 30.9. So this one continues to be bearish until such a time it can move above 30.9 on the weekly, and also on the monthly this one is going to be pressed to the downside. Let's take a look at some European markets. We begin by taking a look at the FTSE, and we can see for the past week, this past week, it was doing its best to hold above the recent weekly closing low. The level there was again 60.42.92. So here we are seeing that closing for the week above that, so that's encouraging. We'll see whether it can hold above that recent, I guess, August September time frame weekly closing low. Anything below that will suggest that there's still downside action here, and we can also argue that there's probably a slight improvement because we are seeing a lower low on a weekly closing basis while we see an improvement in the RSI. So if you're looking for a reason why this market could recover, there is a reason. But if you take a look at the MACDs on the weekly, we can see that this is 2 times rejection with uniform action back below the 0 level. So this to me looks bearish in terms of the setup. We can see that also both MACDs are trading below 0, and because both MACDs are below 0 right now, you have to give the benefit of the doubt to the bears. And actually, if you take a look at the monthly chart is absolutely scary if you're long the market. And we can see here that it needs to hold above the recent monthly closing low, and right now it is slightly below that. So the level to watch here is 6,061.61. Anything below that and this market is poised for a major drop. So just be aware, this looks very bearish in my opinion, and we can also see that that coincides with the RSI on the monthly just about to move to fresh 3-year lows. That's a major sell signal. We can see that one of the MACDs already cracked to fresh 3-year lows earlier in the year, and we can see that the main MACD already cracked to fresh 3-year lows and is now below 0. So this one is an absolutely bearish chart. Indication here is more than likely the odds favor and I'm just talking about the odds, which is what we are trying to do here. Try and figure out where the odds are stacked, and it looks like the odds here, as long as the market is below 6,061.61, the odds do point to a major bear market drop. Take a look at the French market, the French CAC 40, and the level to watch here is if it can hold above the recent monthly closing low. And the level to watch here is 4455.29. Just for down the road, anything below that would absolutely be suggesting markets are in trouble. Okay, also we can see that the MACDs and the RSIs are not too far off from making move to fresh 3-year lows. So here, very close to fresh 3-year lows, and also the RSI is not too far off from making a fresh 3-year low. So the risk continues to be that this could easily take markets lower, especially if they break that 4455 level. Let's take a look at the long-term picture for the German market. So we're looking at the DAX, and this is a monthly chart going back to 1990. Just want to show you, just like we did with the other world markets, Japan and India, we can see that we would draw a line giving us the break level there in 2000, somewhere around there. There would be the line. Let's just draw it somewhere there. We can see that this line happens to be at about 61.8, which coincides with this break also in 2000, before this major bear market period. And once we broke through here in late 2007, here the market went on a major drop, and we dropped back below that red line here for pullback or some type of a crash type formation here in 2011. And now what I'm getting at here is we broke through here, which is the highs there, and now we are showing resistance on that level. So let me draw that again because hard to see. Let's do that one more time, somewhere around there. And it seems to me like right now we are showing resistance on that red line on the monthly RSI. Without knowing what the next couple of months are going to be like, we have to assume that this chart as of right now is pointing to a bear market as we go into 2016. If we take a look at the long-term weekly, or the short-term, I guess long-term weekly chart, so the 2-year weekly chart for the German market, and I want to draw a line right there. And why do I draw the line there? Because it gives us a lot of information as to how the market has been behaving. You can see once it jumped above this level in 2015, we went on a nice run. And since it moved back below the blue line, the market has stalled since then. Every time it hits that level, you can see even this level here was double top resistance on that blue line. The extension of that breakout line gave us the highs there. And this week we are seeing resistance at that blue line. So I think that tells me that more than likely this market is, or this line is showing us, even the weekly charts are pointing down as of the close of Friday. There's also another view, which is to take a look at the break level on the RSI trend line. That break level took place sometime in August before this plunge. And if we draw a line from here, which happens to be at about the 50 level, we can see that this week we've been unable to move above that red line, suggesting that more than likely markets are setting up to go lower. Let's take a look at the Canadian market, and we can see that it is having a positive gain this week. Now I'm not sure how strong one can view this to be, because we are coming back to test the previous break on the weekly chart. And so last week we broke through support. The level to watch there was 13,075.40, which is this previous weekly closing low. Right now we are still trading below that. So even though we've come back for this week, we are still trading below the break level. So I'm not sure this is a nice or a strong looking chart. Take a look. We can also say that, okay, maybe there's some life, because we are seeing a lower low or lower lows on the weekly closing level, but the market has been improving. So there is some type of visual evidence that the market could actually stabilize here. I think the one thing the market needs to do to encourage bulls is to take back the lows line here. But because it is trading below that level of 13,075, I'm not sure this is strong. It needs to be above 13,075 at least to show that it has recaptured the previous lows. So I think right now I would default to saying this is not a strong looking chart. Now, as a sign of what happens when MACDs show rejection at the zero line, take a look at this rejection at the zero line in the Canadian market. This is sometime in October. Corresponds nicely with the highs right there. All right, that's an example of what happens when you see resistance on the MACDs at the zero line. Tends to be a nice high. And we can see that the MACDs are trading below zero. So this chart, in my opinion, continues to be bearish. Again, MACDs below zero is an indication of a market that is not strong. Take a look at the monthly for the Canadian market. And this one here is absolutely bearish. On the monthly chart, we've already broken down to fresh monthly lows. The level there that the market needed to hold above was 13,306.96, which was the lows of September. Now that we are below that level, I think this suggests that we are going to have to see much lower prices. And the biggest reason why is because we can see that the RSI is at fresh lows. We can see that the MACDs are already at fresh lows, and the main MACD is just now moving to fresh lows and also moving below zero. Keep in mind that the RSI, as we have been saying, is below 38.2, which is just another way to look at the market, or let's say it is inverse of 61.8. So these two numbers are interchangeable, and because the market is below 38.2 on the monthly, more than likely this is going to lead to a major drop, in my opinion, in terms of the price action. Let's take a look at one more chart, and let's take a look at the Brazilian market on Friday, trading at 44,439, and this is a critical number, so down about 1.8%. If you take a look at the monthly RSI, that suggests that as of right now we are breaking to fresh price lows below the recent monthly closing low. The level there to watch was 45059.34. So the market is breaking to fresh monthly lows, and this here opens the risk for much lower prices. So that's the risk, that markets worldwide more than likely and generally look like they're really struggling. And I'm going to leave you here with about, see how much time we have, with about 3 to 4 hours left in the US market, with the markets trading at about 1.3% down on the Dow, and we see that the Nasdaq is down 0.77, S&P 500 trading at 2019. So we'll see how we close, but things just don't look great. 2016 might be a challenging year. Eric Muathe, Muathe.com. Keep you guys posted. Enjoy your weekend. Good luck. Peace and blessings. EACS. Woo! Yeah! Woo! Woo! Mwah!